So, ladies and gentlemen, now it is time to call upon none other than the MD and CEO, National Stock Exchange, Vikram Limaye, to join us on stage. Could we have a huge round of applause for none other than Vikram Limaye?
Good afternoon, everyone. Shri Damodaran, other dignitaries on the dais, friends of the dais, members, ladies and gentlemen. At the outset, I want to thank ANMI for inviting me to participate and talk to this audience at the conference. I think ANMI is doing a great job bringing all members together and debating issues of importance. And I think it's an important platform and convention for people to deliberate, discuss, and debate on what the issues of the day are and come up with some concrete, tangible plans and solutions for the year ahead. I want to touch upon a few topics of discussion that are part of the conference today, as well as certain things that I reflect upon. I think it's important to reiterate the role of exchanges and market intermediaries for the economy. Well-functioning exchanges and the ecosystem around it enable economic growth and development by facilitating the mobilization of financial resources. Bringing together those who need capital to innovate and grow, and with those who have resources to invest, is an important function of the exchange. Despite the strong numbers on fundraising and the credible performance of equity as an asset class, the link between exchanges and economic development is not widely understood or appreciated. Several myths are surrounding markets, and there are several reasons why this might be the case. I actually believe that capital raising in this country has a long way to go. It is tied to economic growth. It is tied to capital formation. It is tied to what the investment cycle is. And I do believe that while over the last 3 or 4 years, capital raising has actually been quite robust, the last 1 year has seen a slowdown, or I would in fact say the last 6 to 9 months. The pipeline for capital raising is exceedingly strong. In fact, as of a couple of years ago, the amount raised through bond financing was for the first time higher than the amount that was raised through incremental bank credit. So I do believe that capital markets and exchanges do play a very important role in capital formation and in capital raising, and that's an important function of what we do. We have provided a platform for also emerging growth companies like SMEs to access the markets, and that's a platform that also has been quite successful. You have more than 400 companies listed on the SME exchanges, both at NSE and BSE, and a good volume of capital has been raised for SMEs. And so emerging growth companies also have a platform for capital raising. I do believe there is an insufficient understanding outside the financial fraternity and the trading community, and also in certain policy and academic arenas, of what exchanges and market intermediaries do and how they contribute to positive economic and societal outcomes. There is, for instance, a myth in the minds of some stakeholders that stock markets are only for speculation, that there is no benefit to the economy. It is perceived by the public at large that it's only a minuscule section of the population that is participating in capital markets. It is also perceived that speculators dominate the market and very little long-term investment takes place. The facts would, however, suggest otherwise, and I don't want to get into all the details surrounding the facts. Suffice to say that it is important to recognize that price discovery is an important aspect. Price discovery is important for primary capital raising, and that can only happen in the secondary markets. So robust secondary markets are important for primary markets to function well. And for robust secondary markets, you actually require all types of participants. Speculation is not bad. Speculation is important for good price discovery. And I think as long as you have the right mix of players between retail investors, institutional investors, speculators, arbitrageurs, that's what makes a market. And I therefore believe it is important for all of us to work collectively to make sure that we work towards market development and to correct some of the myths that exist in the market today. I hereby therefore also urge ANMI and all the stakeholders assembled here to take up measures to address these concerns, which can have a much larger impact on the BFSI industry and the Indian economy. I think a core part of NSE's mandate is market development. And I think we are committed to doing whatever it takes in terms of market development that is good for the economy, good for markets, good for investors. Because I think if we focus on that as a principle, I think it would be good for everybody else in this audience. It would be good for exchanges. It would be good for corporates, for entrepreneurs, etc. So we have to do what is right for market development. We have to do what is right for the economy, and we have to do what is right for investors. And I think if we focus on that, we'll get everything right and all the associated benefits from that. I would also like to add that, as I said, a liquid secondary market is critical to a well-functioning primary market. And equities play an important part in financing economic activities. While the equity markets in our country are relatively well developed, I do believe they still have a long way to go. While market penetration has evolved over the last few years and has, in fact, probably doubled in the last 5 years, from what used to be about 2.5% to about 5%, it's still exceedingly low relative to emerging market averages or, in fact, the developed markets. Emerging market averages for retail participation in markets, both direct and indirect, is somewhere in the order of 12 to 15%. We are at about 5%. The developed markets are somewhere between 35 and 40%. So we have a long way to go in terms of better intermediating retail savings into market-related products. And I think that is the future in terms of where I believe markets should go, and where I believe capital raising and the entire market ecosystem could develop. I also firmly believe that if we don't get market development right over the next 2-3 years, and unfortunately we don't have 15 years, we would be seriously compromising on the long-term growth potential of our economy. I don't think we can aspire to grow at 8%, 9%, 10% on a sustainable basis on the back of just bank financing. We need alternate sources of capital, we need other markets to develop, and it is collectively up to all of us to make sure that we focus on market development. Bond markets have a long way to go, currency markets, commodity markets, all of them have a long way to go relative to where we are. And it's not for the sake of market development and the sake of trading, but it is more because market development is critical for the real economy. Markets serve the real economy, they don't work in isolation. So you need good markets in order for corporates to raise money. The real economy needs to hedge risks. So you need a market for that, right? People who are operating in the real economy want to hedge interest rate risk, credit risk, commodity risk. And unless you provide markets and instruments and tools for the real economy to do that, you're not really going to have an efficient real economy. And I think it is important for markets to be facilitators and help the real economy grow. And that's the reason why I believe market development has to be the focus over the medium term, over the next 1 to 3 years, if we have to really provide the right framework for the economy to grow at sustainably higher growth rates. There are various things that SEBI has done as a regulator in order to facilitate market development, and there are regulations that will continue to come that facilitate that. And there are obviously certain concerns that the regulator has that is reflected in the regulation. For instance, recently SEBI has issued a circular on physical settlement as mandatory for all stock derivatives. This was in continuation of their earlier circular to move single stock derivatives from cash settled to physically settled in a phased manner. The initial analysis surrounding the 46 odd stocks that were moved from cash to physical is still a work in progress. The impact is also seen on the underlying markets with widening of, there is a potential that there is a widening of impact costs. It's too early to comment on the impact of this regulatory change, particularly the impact on the underlying cash market. Further, this may provide an impetus to the securities lending and borrowing platform, which also has not seen traction the way it was anticipated. So the hope is that, with physical delivery being mandated by SEBI, that the securities lending and borrowing platform could be the beneficiary of that. There are more than 370 securities that are eligible for trading on the SLB platform, which includes all securities on which single stock derivatives are available. It is important that financial institutions, insurance companies, mutual funds take all the necessary approvals and participate in the securities lending and borrowing platform, as we see this as an important part in the development of our capital markets. I also request ANMI and trading members to provide feedback on the proposed implementation of physical settlement so that changes are implemented smoothly. Last year, SEBI also allowed integration of broking activities in commodities and equities under a single entity. By allowing stock exchanges to launch commodity derivatives and vice versa, SEBI has permitted exchanges to transform into universal exchanges. This move is expected to benefit the trading community as it will bring in capital and operational efficiencies in the system. With the launch of the commodities derivative segment at NSE, the exchange has moved from being an equities fixed income currency exchange to a truly universal exchange by offering trading across asset classes. We've started with the launch of gold and silver futures and have received approval from the regulator for a few more non-agricultural derivative products. We're also working on developing a product suite in the agricultural commodity space. I request the member fraternity to support us in our efforts to broaden and deepen the commodity market. Recently, we also introduced many products in the fixed income space, and this is one area that has been the focus of not only NSE but of several others in the ecosystem, because having a developed bond market is critical to financing the country's growth. The non-competitive bidding platform for government securities was launched last year, and since then, which facilitated participation of retail investors in government securities and T-bills. Subsequently, we've also launched a mobile app, NSE Go Bid, and a web-based platform which provides additional touch points to investors who are registered with trading members of NSE. I think retail participation in government bonds has a long way to go. Today, almost half of the retail savings are invested in fixed deposits, and government bonds is an alternative risk-free instrument, a market instrument that would facilitate intermediating retail savings into market-related instruments. Obviously, liquidity in government bonds needs to be built in order to facilitate retail investors to get in and get out of government bonds, and that is still a work in progress. But I do believe retail participation in government bonds is an important initiative. The other products that we've launched surrounding bond markets is the tri-party repo and the futures based on the overnight call rate MIBOR. It's important to develop an entire yield curve and trading surrounding the entire yield curve. These products are still in early stages of development and need to see much greater traction in order to facilitate a more robust bond market. On the currency side, we've launched weekly options in USD INR, and the product was actually well accepted by market participants. Currently, we are seeing average daily premium turnover of over 6 crores and market share well in excess of 85%. I would like to mention that our volumes and market share in the currency futures and options market have also increased significantly in the last few months, and I want to thank members for making these products a success. I think these are all again important from a hedging perspective to facilitate the real economy to participate in hedging their positions on the exchange rather than in the OTC markets. We're in the process of launching our weekly options on the Nifty 50, and we seek your support in making this product a success as well. In our existing product suite, we're seeing traction on some of the other products as well, and I'm sure that these products are also on your radar. But just to mention, for instance, on the equity side, exchange-traded funds as a category have crossed assets under management of over 1 lakh crores and have witnessed average daily turnover of over 150 crores in December 2018 at NSE. Apart from the NFO of the CPSE ETF and the ongoing investment through EPFO, we're also seeing investors entering into systematic investment plans in ETFs. And I think brokerages should see this as an opportunity for inculcating a disciplined investment approach in equities through exchange-traded products. Sovereign gold bond is another retail product which has seen issuance in the primary market in the last 6 months. But again, this product hasn't really taken off the way it was envisioned. And I think this product also needs some work in order to make sure that we try and facilitate the sovereign gold bond market as well. NSE has been at the forefront of financial technology since our inception, when we launched India's first electronic trading platform. Innovation in capital markets is an imperative. Existing operating models and continued use of legacy technologies will not help firms sustain their businesses in the long term. Advances in technologies such as blockchain, cloud computing, artificial intelligence, behavioral science, and other areas provide us with new opportunities and drive our industry forward in entirely new ways. We have seen many innovative business models being developed, such as low-cost brokerage business models, robo-advisory platforms, etc. The trade receivables discounting system platforms such as RXIL, which NSE has a JV with SIDBI, is one platform where we've experimented with blockchain quite successfully. And I think there are other areas in which there would be application of this technology. NSE has been at the forefront of organizing thought leadership events in technology and innovation through NSE Future Tech, and we will continue to do that, because this business is about technology and risk management, and as long as we continue to focus on these areas, I think we will develop in the right way. The capital market ecosystem is considered as one of the important segments in the national critical infrastructure of any economy, and rendering it vulnerable and susceptible to cyber breaches. The capital markets ecosystem is considered as one of the important segments in the national critical infrastructure of any economy, and rendering it vulnerable and susceptible to cyber breaches or security threats would damage and impair the economic and social fabric of the nation. SEBI last week has extended its framework on cyber security and cyber resilience to all asset management companies. NSE has recently signed an MOU with IIT Kanpur in order to work together on industry-leading cyber security solutions and practices. This partnership aims to develop and create an environment to not only negotiate and deal with the current and future cybersecurity challenges in the Indian financial and capital markets ecosystem, but to also develop tools to further strengthen the cybersecurity framework for our capital markets. The responsibility for fostering innovation and products and services and creating awareness are two sides of the same coin. It has always been the endeavor of the exchange to provide a wide range of business opportunities to trading members. I request members to give their suggestions and ideas for developing products and services which would benefit the market and investors. I request all stakeholders assembled here to jointly take up measures so that we continuously develop the skill sets of the human capital in our capital markets industry. I request ANMI to take the lead on issues such as spreading awareness amongst investors, dispelling some of the myths surrounding the equity markets, and taking up industry-related issues such as transaction tax, GST, standardization of stamp duties across states, and other policy matters by which, by making necessary representations to the regulators and the ministry on issues which are of importance for the development of capital markets. The stakeholders of the Indian capital markets need to be credited with building an ecosystem that has helped put India on the global map. As NSE is celebrating its 25th year of operations, I want to take this opportunity to thank each one of you for your continued support. Our success couldn't have been possible without you. Let's work together even harder to take our markets to the next level and support our country's growth aspirations and potential. Thank you very much.